All right, guys, welcome back to Roxham TV. As always, I'm your host, Jamie, but today we are doing this live show at home, but it doesn't matter because we still got a packed show today. And honestly, the theme is very clear. Markets are strong on the surface, but underneath that, there are a lot of cracks starting to show. Because this week, this is a big tech week. We actually cover that on Roxham TV a little bit, but right now, we have reported earnings. On paper, everything looks great. So revenue is up, profits up. So growth is still very strong, but the market reaction is is really flat or sometimes even negative. So today we're going to break that down properly, like what these numbers actually mean and why investors are still not convinced. Then we'll move into crypto because like Meta is officially back, but this time they're not launching their own coin, the Libra coin. They are using stable coins to pay creators directly, and it's only specifically in some countries, so not open for in a global market. But again, this is a big shift from trying to build a new financial system to working inside the existing one. We'll talk about what that means and why this version might actually work. Finally, good for Facebook. Or I keep calling it Facebook or Meta. So after that, we are looking at companies going all in Bitcoin. So first one is being Metaplanet, now sitting on massive unrealized losses. And then and second one I want to talk about is actually Stick and Shake. So literally they are turning burgers into Bitcoin reserves. So two completely outcome, like on one side, Metaplanet on paper loss, they're losing a lot of money, like multi-millions of dollars. But on the other hand, Stick and Shack, they are making a lot of profit from Bitcoin. So different outcomes, but kind of the same strategy. We're going to look into that. Very interesting. And then we're going to ask the real question, like, does this model actually work or only when the market is going up? Then we go into Michael Saylor. He is back again, and this time he is calling for $10 million a Bitcoin. But more importantly, he's not just talking about price anymore. He's talking about turning Bitcoin into a full financial system. We are talking about credit, also yield and income. So we break down what digital credit actually means and whether this is realistic or just another narrative. And then we're going to go back to DeFi because we have been covering the KelpDAO hack for quite some time. I believe quite a few shows on Roxham TV, even by myself and obviously by other hosts as well. But today, we're not just talking about the hack itself. We are talking about what happened afterwards. So in other words, money laundering, like how the money moved, how it got cleaned, and why it is getting harder and harder to track. Because the reality is simple. This is not slowing down. It's actually the opposite. It is evolving. Today's show is not just about the headlines. It's about understanding what's changing. So big tech, big week this week for tech is spending like aggressively on AI, but the payoff is still very unclear. Like a lot of these AI companies are still not making profit. The number one being OpenAI, of course. Crypto is also shifting from hype alone. Right now, it's more like real world use cases. Bitcoin is moving from an asset to a system. Of course, we're going to touch upon that a little bit. And DeFi risks are getting more complex, especially we are very scared of the North Korean these days. So definitely a lot to cover today. So let's get straight into it. We'll start with the big week in tech because like this week is very important. Like the previous shows, we talk about NVIDIA. So this week, not only NVIDIA, but all the tech giants you could think of, they have the earnings report, strong earnings across the board. But the market we have is like certainly not happy because it's not being reflected on the price. So let's get started with Google first. Actually on paper, they all did well, not just Google. They beat revenue, they beat earnings, but the market reaction is like, nah, or negative. So the real story is not just the numbers, is what comes next. So Google, let's start with Alphabet. So Alphabet or Google, they're just the same. They reported $109 billion in revenue. So net income is actually up 81%. So this is not a small number by all means. Like this is the strongest growth since 2022. And the key driver is quite obvious, like Google Cloud is up 63%. Like there is some real demands that is like AI demand. At the same time, search hit an all-time high. Well, that's interesting. Like Google is actually get more queries, get more usage, and get more engagement. Because like for 2 years, the narrative was always like AI will replace Google search because like you can just ask the LLM, you can just like type on ChatGPT or whatever LLM you choose to you choose on a daily basis. And then that eventually kind of replaced Google search. But like this data shows otherwise. It shows the opposite. AI is driving more search, not less. And on top of that, they now have 315 million paid subscribers across YouTube and Google. And this is like a massive ecosystem. We're talking about Google at the end of the day. So Google looks really strong. AI is definitely helping, not hurting Google's business by all means. My take, if you ask me, like if we go back to the Google stock price, it's looking rather strong. It's up like a 9.96%. I mean, even for Google, man, like Google is a giant. So my take for Google is that definitely very strong. I particularly love the vertical integration because for Google, everything built in-house. Like first of all, they have the search engine, like search engines, like the one of the most valuable business of Google, and Google has multiple businesses already. So they are also building the chips. So everything in-house, like YouTube, they are getting all the footage, the videos. And of course, that is very valuable when it comes to training that AI. And they have the own Gemini. So everything in-house in a vertical integration, that's why it's so disruptive. That's why I'm really bullish on Google. And it's an irony that people expected disruption. What we're seeing here is what Google didn't get disrupted by AI, particularly speaking. They adapt to AI. So Google is integrating AI into its core business, and it's working very well in their favor. That's why I'm quite bullish on Google in the long run. So not just this, this is a big tech week, a big week for tech. So Meta is another one we have to talk about. So let's move on to the Meta platforms or Facebook. They reported a $56 billion in revenue. So it's up 33%. It's actually the fastest growth since 2021. But still, if we take a look at the stock price, you would see a strong comparison, a strong contrast between Google and Meta. Like somehow Meta got a really strong report as well, but it dropped. So like past 5 days, it's actually dropped like 7%, more than 7%. So question being, what happened? Well, and that's because Meta raised its capex to capex like to $145 billion. That is massive, and of course, like it's going all into stuff like AI, like data centers, like infrastructure and models. There was also a small drop in daily users, not huge though, not like very concerning, but enough to add more pressure to the market. They, however, blame it to regional issues like Iran and Russia, but the market did not care. So if you ask me my real take, my personal take on Meta, like Meta made $26.8 billion in profit in just one quarter. They are also laying off workers and still increasing spending aggressively, especially towards AI. And I think that tells you something. Like market is not worried about today, as it's more worried about the build tomorrow. So if AI is indeed can generate that money in the near future, And that's just Meta. Let's hop on to the third major tech company that did the report. Like, as I mentioned, this week is really important for all the tech companies we have. So let's hop on to Microsoft right now. So Microsoft, the earning again, so it is looking rather strong. In fact, the earning is like $82 billion versus $81.3 billion expected. So revenue-wise is up 18%. And of course, like one of the business that grew the most is the cloud business, so Azure. So AI revenue is also up over 120%. Those are excellent numbers for Microsoft. And importantly, spending came in lower than expected. So this should be a perfect report, right? Still, if we look at the stock, it's very interesting. Like it's down. So 5% is down 1.92%. But that is a huge contrast compared to Google. That's a dynamic we are seeing. And this is actually for Microsoft, it's not the first time. Like the same pattern happened in the last quarter. So if you ask me, like Microsoft is not being judged on what they did, it's being judged on whether it can still keep up on that expectation. Like, can Azure sustain the 40% growth? What happens when margins tighten? What happens when AI costs really hit earnings? Like the bar right now for AI and for tech companies is just too high. And then the final one we have to talk about is, of course, Amazon. Like again, tech week, tech earning, we have to talk about. So Amazon revenue is looking good, like $181 billion is up 17%. Again, they beat expectations, and stock, if we take a look at the stock, like ended slightly higher, but this is the most complicated report because when it comes to Amazon, okay, this is the first quarter result. There are some numbers I do want to dive in with you guys. So the net income was 30%, so $30 billion. It sounds really good, but over half of that came from an investment gain. So it's not core business, it's not AWS, it's not retail. So that is one red flag. I wouldn't say red flag, but yellow flag that I spotted. And other number I want to dive into is the free cash flow. So if we take a look at the cash flow, it dropped from $25.9 billion to only $1.2 billion. That is a huge drop. So the next question I'm asking here, like why this massive drop? Well, it turns out it's, of course, spending. So CapEx increased by $59 billion in purchase of property and equipment that proceeds from sales and incentives. And of course, like mostly AI infrastructure we're talking about. So in other words, like if you ask me this report, this Q1 report, if I'm happy with Amazon, of course, Amazon is making a lot of money, but it's also spending aggressively. And when it comes to AI, this is a long-term bet. It's not a short-term story. So we zoom out, like we just cover 4 of the major tech companies in the world. All 4 of them, they beat expectations. They show strong growth, and yet the market is still cautious. Like apart from Google's having a really tremendous day. So that's mostly because this is no longer about current performance. This is about future returns. Because we do have a concern when it comes to AI, because every company in the world, well, mostly in the US, is spending heavily on AI. Hundreds of billions of dollars are going into data centers or chips or infrastructure. But the revenue from AI is still really early because like OpenAI, as I mentioned, they're still not making any money. They're losing money. So AI is still very uncertain. They're still forming. Like in other words speaking, investors are still not sure if businesses like despite investing so much money into this sector and trying to be better, but they're still not sure if ultimately they can make money in the near future. So when it comes to market, Everything is about the expectation, whether investors think it will be bullish for the company to make that money in the long run. So I would say this is more like a transition phase. Like the old model was clear. So maybe just like Google ads, or when it comes to like Amazon, maybe cloud or e-commerce. But there is a new model emerging. The new model right now is being built around AI, so AI first. But when it comes to AI, they spend so much money and then they're investing so much, they might be able to monetize later. And right now, that narrative is just not convincing enough. Like investors want something now, but not something guaranteed in the future. So that's why strong earnings are simply not enough. Like expectations are ahead of reality. So that is the big tech week, and that's the update and my personal take. Let me know if you are purchasing any of these stocks or you think my analysis is correct. Or let's just have a discussion in the comment section below. All right, so speaking of Meta, because we touch upon on Meta earning, I do want to dive a little bit deeper into the Meta business. I'm not talking about the earning right now, but I do want to shift gears on crypto because apparently Meta is back in crypto, but this time they're doing it very differently. So what just happened is Meta is testing crypto payouts using USDC stablecoin, starting with creators in Colombia and also the Philippines. So it's not a global thing yet. How it works is that if you are a creator on Meta platform, you can now get paid directly in USDC. So no bank involved, no wire transfer. It cuts out traditional banking rails. That means you get lower fees, which is good for creators, and get faster settlement and less friction. So instead of waiting for days, you get paid almost instantly. And I know what you're thinking, like Jamie, haven't we seen this before? Like Meta was trying to do some their own stable coin. If you guys have been around, you probably know the Libra thing. But I would say this time is different because Meta already tried that crypto once and it failed massively. So just to give you guys some context, if you haven't been around in crypto, back in 2019, Meta launched Libra, so this Libra thing at the in the logo at the background. So Meta launched Libra, which is a global digital currency designed to work across all its apps. But what happened back in the days is that governments pushed back really hard, and Mark Zuckerberg doesn't particularly have a good reputation, let's just put it that way. Regulators were not comfortable with that, especially in the US. So Meta scaled it down and rebranded it to Diem and eventually shut it down completely. So what Meta is doing right now, Mark Zuckerberg, we have the nice gentleman here. So today, Meta is doing something different. So instead of building its own currency, Meta is using an existing one, being USDC. And it makes the most sense for Facebook current situation, if you ask me. Like for the simple reason though, like USDC is pretty stable, if you don't agree so. So USDC is always like pegged with the US dollar at a 1-to-1 ratio. People understand that. It's really easy to understand. But there is like two ways of looking at stablecoins. Like the downside is that stablecoins are very centralized. We know that they can be frozen, they can be controlled, they can be regulated. But like, I still think this is a smart move for Meta. Like, they're not fighting regulators anymore. They are working within the system. And if we zoom out, this is much bigger than just Meta. This is about how money is evolving. Like, after getting into Bitcoin, I have to say my perspectives changed a lot. Like now, I see two types of money in the system. Like on one side, of course, we have the stable coin. USDC, and then it's really easy to use, widely accepted, but like you could be controlled. On the other side, you also have Bitcoin. Like Bitcoin, there is no central control, no fixed supply, and cannot be printed more. So like this is a good news for Meta creator, like getting paid in USDC. It is very convenient, it's fast, it's simple, and very much global. But long-term wise, think about it, like stable coins is just like fiat money. Like it will lose value over time. And that's just how the system works. Because like dollars are meant to fail in the long run. You are meant to lose your purchasing power throughout different years, throughout the years. So final thought, Meta is bringing crypto back, but in a safe and more controlled way. The real question is, like, is that enough, or will people eventually want money that no one can control? So let me know your thought about Meta, but we are going on a little break now. When we come back, we are diving into the companies that added Bitcoin to the balance sheet. Like some actually struggle heavily. We're talking about millions of dollars being in unrealized losses on paper, but some business success and having a really good time. So make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
Sticking around with us after the break. So now I want to talk about the companies that add the Bitcoin to the balance sheet. And let's take a look at how they are doing these days. Okay, I'm going to start with so-called the Bitcoin's version of MicroStrategy because I'm in Asia. And then right now it's going through a real test. Let's just put it that way. So Metaplanet has been aggressively buying Bitcoin even during the downturn. They are now the number 3. So if we quickly go to the ranking list, and if we go to like Bitcoin treasury, you can see like number 3 is Metaplanet. Of course, number 1 is MicroStrategy. So Metaplanet has been buying so much BTC now that they're the top 3 corporate Bitcoin holdings globally. But here's the problem. They bought a lot of that Bitcoin at a higher price. So if we take a look at the average cost, they paid 97,000, so 97.5K per BTC. That means they are in unrealized losses. They are sitting on nearly $500 million in paper loss. At the same time, the stock is down more than 80% from the peak. So if we take a look at the picture, it's not like the graph is not very pretty. So they're down 80% from the peak. And people are starting to ask the core issue here. So this strategy, like Bitcoin treasury companies, they look amazing in a bull run. But right now, no doubt, we are in a bear market. And it does look very painful right now, judging and looking at the stock price. Because this model originated from Michael Saylor himself. It looks really good. So basically, you raise money, you buy Bitcoin, and then the stock price would go up and you raise more money. That works when Bitcoin is going up. But when Bitcoin drops, everything reserves. So guess what? Stock price is going down, like financing becomes harder and pressure is building up. And that's exactly what we're seeing, particularly towards Metaplanet. But shockingly, like instead of slowing down, if we go back to the Bitcoin balance sheet of Metaplanet, they are still buying more BTC. So if we take a look, the purchase, so of course BTC being the orange line, and the purchase that they made literally in April, so that was another huge purchase. They even issued new bonds recently just to buy more BTC. And the long-term target is huge. They want to hold 210,000 BTC. That is around 1% of the total supply. So clearly, this is not a short-term trade. This is a full conviction strategy. Now, here's where it gets interesting. Like they know just holding Bitcoin is not enough. So they are trying to build a full system around it. So not just some treasury, like adding Bitcoin on the balance sheet, but a full system. So they are using Bitcoin as collateral, generating that yield and building financial products on top of that. So in other words, basically turning Bitcoin into a capital engine. They are also expanding globally, setting up operations in the US, building infrastructure, launching new products, and even a Bitcoin rewards card. So this is not just like buy Bitcoin and hold and hope it will go up when the bull market comes back. They are trying to become a Bitcoin financial company, and that's different. But despite all this, like the stock is getting hit hard. It's very painful to look at this graph. So this tells you something. The market is not buying it for the moment being. And there's also another risk for Metaplanet. Japan may disinclude companies like Metaplanet from major indexes because like holding too much crypto asset, or how they view it, like the volatile assets, they just don't like it in a traditional market. And of course, like if they get kicked out of the index, that matters a lot. Because if that happens, they lose institutional flows. They will lose that passive buying pressure, or again, there will be more downside pressure on the stock price. So this is like a real bear market test for this model, if you ask me. Like, can a company survive just by holding Bitcoin, or do they need real revenue? Do they need cash flow or real business operations? Because think about it, the whole reason, the original idea of why Metaplanet added Bitcoin to the balance sheet was that to try to save its original business, which was failing and losing money. Because like eventually you can't just rely on the price going up. So the final take is like, I'm not saying Metaplanet is failing, but it's definitely being tested. The idea is simple, like Bitcoin as a treasury asset, but the execution is hard because markets move in cycles. And right now we are seeing what happens when the cycle turns. So when it comes to like Bitcoin treasury, it definitely doesn't work with all the companies, because at the end of the day, it really depends on how healthy these companies are. Because like if we take a look at the top 100 public Bitcoin treasury companies, we take a look at this list. I'm 99% sure that like in the next cycle, most of the names that we see here not going to be around. So yeah, let's see how that turns out. But it's not all doom and gloom. Now I want to switch over to another business, another company that is doing really good in the Bitcoin community, and they are working really well, adopting Bitcoin. And this company I'm talking about is not just a crypto startup. This is actually a fast food chain. And they are saying Bitcoin is saving them some serious money. So like what happened is that, if you guys don't know, this chain is Stick and Shake. Stick and Shake says accepting Bitcoin is cutting payment costs by up to 50%. Because many people might not realize, when you pay with credit card, so what it does, like the business would pay the fee, like us as the user of the credit card, we don't have to pay, but merchants have to pay usually 2 to 3% fee. But with Bitcoin, those fees would drop significantly, especially using Lightning Network. So according to the executive that was speaking at the Bitcoin Las Vegas, what they said here is that if all customers paid in Bitcoin, they could save around $6 million per year. Because this is not just about payments. They are changing the entire system. Like, you could be very curious, like, how would that happen, right? Because think about it, like every Bitcoin payment, it does not get converted when it comes to Stick and Shake. It goes straight into the balance sheet. So you're saving on basically two payments here. So for merchants, they don't have to pay for 3% fee anymore. At the same time, they get that Bitcoin, that precious Bitcoin on the balance sheet. So what happens here for the backers or for Stick and Shake? Customers, some of them, they were paid in BTC, and then the company would keep that BTC, and over time, guess what? It looks like a reserve, so Bitcoin reserve. And this is a big shift because most companies they would accept Bitcoin for sure, not a lot of them, but usually they would like convert to cash almost immediately. But here, what we are seeing the dynamic change is that they accept and they actually hold on to that Bitcoin. So every bagger being sold becomes Bitcoin on the balance sheet. What's even more interesting is that they are also paying employees in Bitcoin, like workers would earn a Bitcoin bonus per hour worked. This matters because now the incentives change. Employees are earning also a very scarce asset, not just fiat wages. And leadership is also doing the same thing for this fast food chain store. So leadership, an executive team, they are taking part of their compensation in Bitcoin. So everyone inside this company is aligned. Company holds that Bitcoin, employees earn that Bitcoin, and executives take Bitcoin. They are even expanding into operations for their franchisees. Like franchisees can pay fees in Bitcoin. So what we have now here is a very clear circular economy inside the business. They are I like to say they are really good at marketing, and they are marketing the shit out of this. And when it comes to like Bitcoin community, when we see a bagger chain accepting Bitcoin, of course, like Bitcoin community would would be very supportive of that. They even have like Bitcoin milkshake, like theme menu items. So they market the shit out of it. And the whole thing is so practical. And if you ask me, the owner is a hell of a really smart businessman. It's very practical. It lowers the fees. Like merchants don't have to pay for the ridiculous 2 to 3% to Visa or MasterCard. There's better margin, and they're building a treasury right now. They're building a Bitcoin reserve. If Bitcoin goes up, the balance sheet improves automatically, because like cash, we know it loses value over time. Bitcoin, however, it has a fixed supply. Instead of earning money that depreciates, they are earning something that is very scarce. When a business like adopt Bitcoin like this, they are not just adding a payment option, they are upgrading the financial system. And that's why I would say like stick and shake, I think it's going to do very well in the future. All right, so speaking of Bitcoin, let's also take a look at some quick price update. We're not going to spend too much time here because that's what we do, looking at Bitcoin's price every single day here on Roxham TV. So just give you guys some quick update where Bitcoin is at. Bitcoin is sitting at $77,000, literally just right underneath the rectangle that we drew. Of course, like we drew this region months ago, and that's why we are eyeing this very closely. We are at this very critical and delicate point. This resistance looks like we still haven't broken out of this resistance. Of course, there's some I wouldn't say deviation, but there was some wick, because like we spotted this bear flag, and there are some wick on the daily candles. And this region is so important because it's not only the top of the bear flag, but if we zoom out, it also I would say a free trading region that we don't have much data around this region. That's why this is so delicate. But looks like, okay, I would give it to Bitcoin. Like April was looking very strong. We have a strong monthly return. But however, like, okay, I'm not like very optimistic like most of the Bitcoin maxi is. Of course, long-term wise, I'm optimistic. But what I mean is that in the near future, like in the coming weeks and in the coming months, I still see we are bouncing around, consolidating, or maybe heading to lower places, because like we are at that critical point. What this past few days suggests is that we are still finding a lot of resistance at these key area. There's like critical line that I drew, support line that resistance line that I drew. Every single time we touch upon, we just like bounce off and we come back down. So that means this bear flat is still valid, and this is one. And then the second thing is that when it comes to daily RSI, so I want you guys to focus on the bottom here. So what I've done here is that I connect the dots. So whenever we hit the resistance when it comes to daily RSI, I connect those dots and I come up with this like declining resistance on the daily RSI. And at the same time, we have this like rising support on the RSI. In other words, it turns out to be like a triangle shape. And what it does here is that we are building up the momentum and squeezing inside this really tight range. So we are either going up or down. We're going to have a strong bounce because we have been building up inside this momentum for so long. Like when it comes to momentum, just think of like the strain. Like the harder you pull the strain, of course, like the harder it will bounce back. So this is what it looks like to me on the chart. So squeezing in that momentum. Yesterday we talked about the maybe there's like a daily candle closing below the RSI a little bit, but like we quickly pick up the pace again, and we basically close above this rising support on the RSI. So this is actually a good thing. So what it suggests that maybe we're gonna hover around inside this tight range, inside this carrier, this region a little bit before heading to a really surprising place. So either up or down, but like a probability it closer to going down because like there are some okay, so when it comes to probability, let's actually go to the weekly chart. So looking at the long-term thesis. Long-term wise, of course, you guys know me. I'm a big fan of the 4-year cycle because it's kind of a tool for us retail to gauge what could happen, like the probability, like predict what could happen in the coming months. And I don't understand why a lot of people are against it, because like this is like very limited tools for us retail to have a better gauge of what is going on. So like on the daily candle, like one thing I noticed, because I'm using the actually weekly, on the weekly candle, we are using a much longer long-term perspective, longer time frame, higher time frame here. So weekly, it might like we're gonna see the effect months later. That's why we are looking at daily and weekly and sometimes monthly as well. So like zooming out to the weekly on the RSI, one thing I find it very interesting, because like, okay, we have all the bear market, and for the weekly RSI, we hit the bottom in all the bear market we have seen. And usually when it does, that means the bottom is like is near. So like for that was back in 2015. So we had the bottom on the RSI, and take a look at the price. That means like, okay, the bottom would happen in August, but the bottom on the RSI, weekly RSI, got printed in January. So it was still like of course, like half a year in advance, but this is a lagging indicator. So like that's why the price is also lagging as well. So that's one. And the second incident we could look at is like 2018. So 2018, we mark a bottom on the weekly RSI. And then usually, okay, we still bounce and consolidate a little bit before heading to higher places. So this is a second incident. That incident, basically data print we can look at is 2022. So here we have the bottom on the RSI. So if we go back to the price action, we still hover around. So still consolidation period. We actually found the bottom in November 2022, while the weekly RSI printed a bottom in June. So it's still front run. So in other words, usually this bottom on the weekly RSI would front run the actual price action, if that makes sense. So on the weekly hour side, we have bottom out. Looks like we are bottom out. And if we zoom closer to the price action, it's awfully similar to the previous cycle. So literally back in 2020, 2022, what we've seen here is that we printed the new all-time high, the previous cycle all-time high, so which is $69,000. And if we go to the hour side, that happened to be a top, and looks like if we go back to the current bull market, we printed a top here, and also that happened to be a top for the price action, so 126K. And then after that, there was like going down, so it's declining. Same for the hour side until we printed a bottom on the weekly hour side, because we dropped below 30, and 30 is a magical number. We have to focus here on the weekly hour side. But like that being said, the weekly hour side has bottomed out. Doesn't mean we're gonna get a parabolic move instantly, because it usually lags. And I literally just provided you with all the evidence, with all the data in all of the previous bear cycle. So it just means, okay, we have bottomed out, but like price can still go down. So most often than not, we're going to consolidate a little bit. Last cycle, we consolidate, and then we drop below, like seeing the cycle bottom forming in November 2022. So we found a bottom of 15.5K. That was basically, so let's see how long it took us. So 147 days. So like there is still a possibility. Our side, yes, we printed a bottom, but based on the historical pattern, we have to consolidate a little bit, and then we might have to lower places. So that is one thing we still have to bear in mind. All right, so that was the quick Bitcoin TA update, price update. We'll take a short break from here. And when we come back, I do want to talk about the Bitcoin Las Vegas a little bit, because there's some interesting statement coming out from the conference. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
After the break. Now I want to talk about what happened during the Bitcoin Las Vegas. So that is one of the boldest calls in the market right now. of course, you guys would have probably guessed it, is coming from none other than Michael Saylor himself. So what he said is that Bitcoin is going to $10 million per coin, maybe not next year, but over time. So his argument is actually quite simple. So Bitcoin is not just going to be held, but it's going to be used. So right now, most people treat Bitcoin like digital gold, like you buy it, you hold it, and that's it. But Michael Saylor is saying the next step is building financial products on top of Bitcoin. So he called this as a digital credit. What he means is that you would take Bitcoin and turn it into yield generating asset. So instead of just holding BTC like you do, you can earn money from that. You can earn yield from that. So here's the key idea. If Bitcoin can generate yield, more institutions would want it because that's what they do, right? They only think about yield and very sustainable and low yield. So if more institutions want it, more money would flow in. And that demand pushes price higher. And Michael Saylor pointed to the strategy, pointed to their own strategy, their own product being STLC, of course, on Roxum Exchange as well. So what STLC does is a Bitcoin-linked preferred stock. So he said it scaled to around $8.5 billion in just 8 months. So that tells you there is real demand for this. Now, if you zoom out, this is not just one product. This is about global credit market, which is around $300 trillion. Yes, that's trillion with a T. So even with a small amount of that market moves into Bitcoin-based products, that's trillions of dollars of potential demand. This is so crazy. To see, I would say to see how Bitcoin evolves from store of value to financial infrastructure, not just something you hold like digital gold, but something the system is built on. So of course, on Roxum Exchange, we talk about that a little bit as well. Roxum Exchange is building all these financial products around Bitcoin. But something different is that for Roxum, we took it one step further. So instead of Michael Saylor has been nonstop shilling STLC, but for STLC, he's still earning that yield in USD. Roxum is doing something like one step further. We went one step ahead, so ahead of the curve. So instead, users would earn that yield in Bitcoin. So not dollars, not stable coins, but in BTC. And ultimately that makes sense because the mentality here, we should always try to stack more BTC instead of USD because we know USD is a fiat dollar. Basically, any fiat currencies in this world are meant to fail. Your purchasing power is meant to go down if you only hold fiat currencies on your basically on your portfolio. So that's the whole core idea of why we have this Roxum Exchange in the first place, because you don't want to sell Bitcoin. You don't want to leave the system. You stay in Bitcoin, and your position grows over time. And with Roxum, it's very easy. Basically, a few clicks of button, everything done in less than a minute. So for STLC or particularly what Michael Saylor said, the $10 million, it sounds very crazy. It sounds very extreme. Will Bitcoin reach $10 million per coin? I don't know, but the logic is what matters. If Bitcoin stays as just a store of value, growth is one thing, but if Bitcoin becomes the base layer for global credit, that's completely different level for demand. At that point, you're not just valuing an asset, you are valuing a financial system. That's why I'm intrigued with what he said. All right, so I do want to shift gears to crypto now, because what we do here is Bitcoin and crypto, they're completely different stuff. They're different assets. So what happened in crypto? We talk about there's this massive hack in DeFi. So KelpDAO, We talk about that multiple times on Roxham TV, myself included, and also from different hosts on Roxham TV. But now, like, we actually understand what happened after the hack. And that's the part people should really pay attention to, like, and particularly why I'm looking very concerned here. So at first, like for this hack, like it looked like a normal DeFi exploit. So funds were stolen. Some funds were frozen, protocol stepped in. It looks like damage was contained, but that's not the full picture. The hackers moved fast and very fast. They actually took a large portion of that stolen ETH and converted it into BTC through Thor chain. So this matters because, like, once funds move from Ethereum to Bitcoin, tracking becomes much harder. Like, we have different chains, different systems. You break that trail, and this is a key update. Like, this is no longer just about stealing funds. It's about how efficiently those funds are being cleaned. Because before that, we know that the hacked monies, they usually like they were mixed around on Tornado Cash, but those got sanctioned and then they moved to other tools. But guess what? Those get shut down as well. So now they moved to cross-chain systems, and Thor chain being the number one of them, like it's the main one. The reason why hackers would choose Thor chain is because there's no KYC, there's no blacklist, no permission, and more importantly, they have native swaps. So we are swapping real ETH into real BTC. No wrapping needed, no middle layer. That one move alone is enough to make tracking significantly harder. To be fair, that's not what Thorchain is built for, but like hackers ultimately find that this is very useful for money laundering. And there's also another layer to it. Large transactions can be split into smaller ones on Thorchain, like executed over time. So instead of one big movement, you get many small ones, which is, again, make it very hard to detect and very hard to flag. And here's the scary part, like hackers are not just stealing better, they are laundering better. This is not just KelpDAO. Like, we have seen the same pattern across multiple major hacks. Funds moving through Thorchain particularly, then disappearing from the original chain's visibility. And this is not just Thorchain, the next step is already being built. So we are talking about privacy layers, so like Zcash or Monero. So the flow we are spotting here is basically like this North Korean hackers. I'm not like pointing towards North Korean hackers, but like they are really good hackers coming from North Korea. So the flow they would do is that they would steal that money from DeFi or big exchanges. They did that to Bybit before. So they'll steal that money. They will swap on chains, and then they would move into privacy assets. Like at that point, tracking becomes very, very difficult. So ultimately, I do expect we're going to see more hacks, not fewer, because the incentives are too huge. We are talking about hundreds of millions of dollars per attack. And now the exit routes are being more efficient. We have Thorchain, we have like privacy coins. So a lot of this activity, of course, points toward to highly organized groups, including North Korean hacking groups. I'm not saying like other countries can't have amazing hackers. Of course they do. But like bear in mind, like these hackers, all they do is that they sit in front of a computer in North Korea, and the government tell them that you have to hack some money for the government, otherwise you're not being given food, something like that. So these guys, they are fighting, literally fighting for their lives. So that's why they're so good. That's what they do. They specialize in cyber thief. So the final take is like the KelpDAO hack. This is not it's not the full story. The system behind is the full story. So DeFi is open. That's the strength, but it also the weakness. Like anyone can use it, whether it's good actors or bad actors. And right now, that bad actors are getting faster and better than the defense. So let me know in the chat, like whether you're still utilizing DeFi, you think DeFi is going to come back, or we're just like going through a difficult patch. But anyways, that's pretty much all I want to go through in today's live stream. And make sure to give us a follow before you go. So make sure to follow us on X. My X is at jamjamcrypto_IO. Make sure to follow Roxham TV as well, because like we have regular news coming out on an hourly basis. Not just about Bitcoin, but like AI, about finance, basically about life and all the valuable stuff you would want to get, and you could find on Roxham TV. So make sure to give us a follow. We have amazing guests coming out or joining our shows on a daily basis. And then if you haven't subscribed yet on our YouTube, make sure to do so. As always, I'm live here on Roxham TV Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry. My recorded version is also available on both channels. So being Jam Crypto YouTube channel and also Roxham TV YouTube channel. Thank you guys for watching. I hope you guys have a great weekend, and I'll see you guys next week.